From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. It's a busy day in Washington, with President Biden meeting this afternoon with financial regulators, including Treasury Secretary Janet Yellen, Fed Chair Jay Powell, and SEC Chairman Gary Gensler. Welcome now a member of the House Financial Services Committee, Republican Congressman Warren Davidson of Ohio. So, Congressman, thank you so much for being with us. Give us a sense from your perspective what the president should want to talk to his financial regulators about.
David, it's an honor to join you. And look, I'm glad the president's meeting with his regulators because, this space has needed attention for some time. Frankly, we're talking crypto especially, but the whole state of financial regulation is having a hard time keeping up with the fintech, innovation that is, moving much faster than regulators can. So I think one of the big things that he has to talk about is how do we do federal policy that makes it clear what is a security and what is not. That's Gensler with the SEC. You have XRP, for example, is a cryptocurrency that could be very useful for the payment system. But Ripple, how separate and distinct is that as an entity? And if they exercise a lot of control over it, it might look a lot like a security. If there truly is a firewall there, it might look like it's not a security. And we've tried for a long time to get a bright line test there to make it so it's less subjective for regulators. And, one of the encouraging things is Gensler really understands that. He taught blockchain courses at MIT prior to taking this current role. So it's good that he has some expertise there, and hopefully he'll listen and have good dialogue.
So, Congressman, give us a sense of whether the regulators who will be meeting with President Biden have the authority under current law to do what you think needs to be done. I know you have a bill, the Token Taxonomy Act, to try to make sure, I guess, that the SEC has jurisdiction over certain things.
Well, I mean, what you've seen in this fintech space for a while is really regulatory arbitrage. So, there are people that really are securities, and they've tried to kind of game the system so that they can avoid, heavy-handed securities laws. And look, there are plenty of those that I'd like to change. What my bill does is it doesn't really eliminate any of those laws or even change them. It just makes it clear, there's a Supreme Court decision that created this thing called a Howey test that applied to orange groves in the 1950s. And if it was speculative and you were still planting, but there wasn't an orange crop, well, then it looks more like a security. And that leaves a lot of discretion. So to regulators, what we're trying to do is say, whether you're a regulator or you're a fintech startup or a venture capital fund looking to invest in this, you shouldn't have to worry about somebody coming in after the fact and by regulation, by enforcement, kind of blowing up the whole deal. You should know straight away, we are a security. We're going to be regulated like a security. You can't, arbitrage the system. Or let's be clear, this is not a security. Even if the SEC doesn't like that it's not a security, it falls on this side of a bright line test, then there's a different regulator. That's one of the main things there. One of the other pieces in crypto, because private keys can be shared with multiple folks, is custody issues and who has custody of it. Technology has largely solved that, but it hasn't solved it for regulators. And then the third piece is tax. And, of course, that's got its own sensitivities, but it would treat crypto the same way it treats other currency in the de minimis exceptions.
Congressman, give us a sense, because you know this area so well, of what are the problems we're trying to address. Is this a matter of using crypto for illegal purposes? We saw that, for example, in the ransomware situation. Is it protecting consumers, or is it protecting our ability to control our money supply, protecting the Fed in a sense?
Well, look, I mean, these are all important issues that we had a good hearing last week. I'm the ranking member, lead Republican on the FinTech Task Force. And we had a hearing last week on the central bank digital currency debate. And frankly, there are people that really just want a digital dollar that isn't distributed ledger. It doesn't use the blockchain technology. It uses the same architecture, maybe with different or better encryption than what is currently commercially available in the U.S. But it inherently has a central authority. It uses the same kind of failed system of trust that is subject to breaches, just like the Colonial Pipeline. And people are making a lot of, crypto because it's being used for ransomware. But the reality is, the federal government seized over $1 billion in crypto transactions last year because it isn't really private. It's not completely secret. If it's on chain, on the blockchain, you can follow all the moves all the way to the off ramps. And that's exactly what happened in the Colonial Pipeline. So there are people that actually favor it for tracking illicit finance. We don't have our regulatory framework right on that piece. And so whether it's a central bank digital currency or anything else, I think if you get a secure architecture, true distributed ledger technology without a central authority that can filter the transactions, it could be permissionless like cash is, and yet not be completely secret. It has a way to be traced with probable cause that a crime occurred. And instead of using the money as a system of control, you could focus on the crime itself instead of causing some of these economic distortions that you see in the current system.
Congressman, finally, to move beyond cryptocurrency for a moment, the reports are that President Biden wants to talk to these financial regulators in part about the issue of climate and the need for disclosure, government-required disclosure of the consequences potentially for their business from climate. Now, whatever you think about the climate debate, do you agree at this point it's become material enough that companies are going to have to start disclosing?
Well, that's a key word there. Material impacts are already a fiduciary duty for disclosure. So, companies that can say they have a material adverse or favorable impact due to climate change would already be obligated to disclose it. What Democrats broadly want regulators, Secretary Yellen, Secretary of Treasury, but Chairman Gensler in particular, to do is mandate that public companies are required to disclose, and they want it in a kind of standardized format. Now, they're pushing this on climate, but they're really pushing it on a whole broad set of environmental, social governance criteria. And so you try to measure every company the same way. There are merits to that argument because it would be standardized, but I think for any company, given the current culture, saying that you don't have a material impact from climate change would be looked at, oddly by some folks. And the reality is there are lots of companies that's not a driver for their balance sheet, their cash flow, or their income statement. Yeah. It might be a personal goal of the management team. It might be something that investors find interesting and, kind of social cause investing. Right. But not every business model has that. And so they're going to see the debate, but I think they've already got a foregone conclusion in terms of what they want to do. It's just how do they do it?
Okay, Congressman, really a delight to have you with us. Thank you so much for joining us. That is Representative Warren Davidson, Republican of Ohio. Coming up, did the Fed signal too much tightening last week? We ask former Fed economist Claudia Sahm. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Annabelle Drulers in Hong Kong.
Thanks, David. Well, the pro-democracy Apple daily newspaper may shut down later this week. That's according to Reuters. The board of Hong Kong's Next Digital met today with the newspaper under pressure. Last week, police arrested top editors and froze the newspaper's bank accounts for allegedly violating the Beijing-imposed national security law. Owner Jimmy Lai is in jail for participating in unauthorized gatherings. Iran's president-elect says he will not negotiate over Tehran's ballistic missile program or its support of regional militias. Hardline cleric Ibrahim Raisi, who recently claimed victory in Iran's presidential election, also says he wouldn't meet with President Biden. Negotiations have been taking place in Vienna to try to save a deal meant to limit Iran's nuclear program. And we'll have more on that story in just a few minutes from now. The Supreme Court's given Goldman Sachs a new chance to stop a lawsuit that accuses the company of misleading shareholders by masking conflicts of interest in mortgage-backed securities that it sold. Goldman and others had argued an earlier ruling made it too easy for shareholders to press class action fraud lawsuits. The High Court sends the case back to appeals. The investors said they were deceived by Goldman Sachs' public assurances that it was being vigilant about avoiding conflicts of interest. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Annabelle Drulers. This is Bloomberg.
Thanks so
David?
much. Thanks so much, Annabelle. Markets reacted swiftly last week when Fed Chair Jay Powell laid out the results of the FOMC meeting, including bringing up the time of a likely Fed rate hike, and noting that 13 of the 18 members are more worried about inflation being too high than too low. We welcome now Claudia Sahm, senior fellow at the Jane Family Institute and Bloomberg opinion columnist. She earlier served as an economist at the Federal Reserve itself. So welcome back. Great to have you, Claudia.
Yeah,
so I'm curious, really, I've been wanting to ask you this. Do you think that the Fed went too far? Because the market certainly reacted pretty firmly.
So I think the Fed is doing its job. If you listen to the press conference, if you listen to Fed Chair Jay Powell, which I would highly recommend, he was very clear that the Fed is committed to both of its mandates, full employment and stable prices. The Fed is clearly aware that we've had some large increases in prices. They've been very clear that they think that this is a temporary increase. We're going to see a higher level for a while. That's good. That's healthy. But the dot plot, the summary of economic projections that come from the FOMC participants, voting or not, stole the show, and that was unfortunate. And the Fed needs to fix this. This is a big problem for their new framework and their messaging.
So some people, some commentators in watching this said they think that maybe Jay Powell was shifting the balance a little bit between the two mandates, that he's now a little more concerned about inflation than he was, and maybe a little less concerned about full employment. Now, listening to him carefully, he still thinks we're going to have full employment not that far into the future. Do you think he's too sanguine about that?
No, I think Jay Powell and the Fed right now are trying to thread a very difficult needle. It's tough for markets. Like, I feel for everyone. This is a time of great uncertainty, and the Fed has never been good at talking to people. And right now it's having trouble talking to markets. Now, the average inflation the target framework, the new framework was years in development. Jay Powell, among any former or current Federal Reserve official, is the one who is most committed to full employment. And he is going to do everything he can to get us there and not shortchange the full employment mandate over the inflation. But we live in a very complicated world, and he's trying to remind us that. But it's tough. It's not what we want to hear. We want to hear things are back to normal and we got our old Fed back that we understand. But that's not the world we live in.
So Claudia, you really do labor economics. I don't, but one of the things that doesn't look normal to me is we still have millions and millions of people who don't have jobs, who had them before the pandemic. We also have record number of job openings. Why that disconnect?
I think what we're seeing right now is a labor market that is not one labor market, right? And we know from last year that while the economy shut down rapidly, we had temporary layoffs in the millions and millions. When things started to reopen, those high wage workers, people who could work from home, they came back. Those jobs came back really fast last year. But we're at the part of the recovery where we've had people who've had to leave the labor market, maybe they're afraid of dying, so they don't want to be in there. They got to take care of their kids. There's a lot of different reasons, and they are out of the labor force in numbers we have never seen in a recession. So getting them back in is harder. And we do know that low-wage workers, despite a lot of the anecdotes out there, have not had the bargaining power, have not had safe work conditions for decades. So I think we're getting these very mixed signals. We have long-term unemployment that's really high and rising, and then we have job openings all over the place. So I think we've got to move away from thinking there is the U.S. labor market and understand that we have a lot of different situations happening right now, more so than even in the past.
Claudia, as you lay it out, it is a really hard problem. This is not simple. There's not a simple solution. But is there anything the Fed can do about this? Because the problems you just identified doesn't sound like something the Fed can really directly address.
Absolutely. So the Fed's job right now is to be as boring as possible, to make their communication clear, to put the dots on a vacation, And we need to be so focused on what is happening in Congress. The fiscal policy response right now needs to be the top priority. Every inflation hawk, every dove should be working 24/7 to make sure the trillions of dollars in spending are well done and they serve us well for decades. Like that's the game in town. The Fed isn't.
Fair enough. Well said. Thank you so much, Claudia. I really always enjoy talking with you. That's Claudia Sahm.
Yep,
She's
same.
former Federal Reserve economist. Coming up here, we're going to go through Iran's election of a new president with Afshin Malavi of the Foreign Policy Institute. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Iran elected a new president yesterday, Ibrahim Raisi. He's a protege of the Supreme Leader, Mr. Khamenei. Well, to take us through what that might mean, especially for ongoing talks on the nuclear agreement, welcome now Afshin Malavi, Senior Fellow at SAIS Foreign Policy Institute. So welcome. It's great to have you with us. We want to know what you think about the election. It came out the way, obviously, the Supreme Leader wanted it to come out. I understand we have something more of a hardliner. But what does it mean, do you think, for these negotiations over a nuclear deal?
Well, I think it certainly complicates the negotiations over a nuclear deal. I mean, look, Ibrahim Raisi is someone who came of age with the revolution that brought the Islamic Republic into power, but he's also someone who's been involved in some of the bloody aftermath of the Islamic Republic. He's been implicated in the mass killing of dissidents in the late 1980s. He's been on the prosecutor side. He's been with the judiciary, linked to security and intelligence services. And frankly, he's the only, when he takes office, he may be the only sitting president of the Islamic Republic of Iran's history that is currently sanctioned by the U.S. government. So it certainly complicates matters. But the real winner in these elections is the Supreme Leader, Ayatollah Ali Khamenei, who has virtual veto power over all matters of state. He masterfully engineered this election to bring in his protege into power. When Iranians have been given a choice to vote, they tend to vote for reformists or moderate candidates rather than hardline figures like Raisi. But they weren't given much of a choice in this election because several of the top reform and moderate candidates were disqualified. And so they were left with Raisi. And what the Iranian population did in many ways was stepped away. We had the lowest voter turnout in the history of elections. So this is certainly going to be a complicating factor. But those who might argue that, well, now that the Supreme Leader has his man in power, he'll feel more comfortable guiding these negotiations. But that is still a tough leap.
Well, what I took away from what you just said, which was really interesting, was I'm asking the wrong question. It's not whether Mr. Raisi wants a deal with the United States. It's whether the Supreme Leader does. And that leads me to the question, does he? Do we know?
Yeah, that's a really important question, and I think the Supreme Leader does want to deal with the United States. Raisi, in his recent press conference, he said that our foreign policy does not begin with the JCPOA, and by that he means the Iran nuclear deal, and does not end with the JCPOA. But frankly, it does, because without a deal, without Iran getting back into international oil markets and exports, Iran's economy, which has been battered over the last 3 years, it has experienced negative economic growth for the past 3 years. It's a deteriorating economy. Inflation is rising. The rial is plummeting. There simply isn't a pathway to an improved economy without some kind of deal with the United States. And the Supreme Leader, Ayatollah Ali Khamenei, is well aware of that.
Mr. Malavi, give us some sense of timing, if you could, because, again, I've heard it suggested, at least, that Mr. Raisi doesn't actually take office for, I think, 6 weeks, something like that, and it might make sense to try to get a deal done from the Supreme Leader's point of view in that 6 weeks. So if it goes badly, he can blame the old regime, not his person, right, Mr. Raisi. And if it goes well, Mr. Raisi will be around for the economy bouncing back.
Yeah, no, that's absolutely right. I mean, and there is a lot of talk about how this is the time. The next 6 weeks is going to be critical because you still have President Rouhani and his team, which frankly is more palatable to the Biden administration. And they have some momentum in these nuclear talks. And as you put it, if the deal goes through, they could benefit from the economic recovery. And if it doesn't go through, I think that's the real danger is if it doesn't go through. Because, what is Ebrahim Raisi going to do next? He has signaled that he's going to maintain Iran's relatively hardline foreign policy when it comes to its regional allies. He's not interested in negotiating on Iran's missiles. Look, the intention of this technical nuclear deal from the Biden administration was always a hope that the technical nuclear deal could lead to a wider deal with the Islamic Republic of Iran, and missiles could be on the table. Iran's support for proxy militias in the region could be on the table. But I think with this election of President Raisi, all you can hope for if you're in the Biden administration is a technical nuclear deal. I don't think we're headed for a broader deal between Iran and the United States.
And I wonder whether we got some indication that just today, because as I understand, Mr. Raisi, in his first public appearance, said we are not going to talk about ballistic missiles, which is something that the Biden administration very much wants to get to in a second round. And also, we're not going to talk about our support for, we would call them terrorists in the region. So is that really indicating that President Biden can't get the thing that he wants the most?
I think it does indicate that, and in many respects, Iran often never misses an opportunity to miss an opportunity, so to speak. I mean, Ayatollah Khamenei, the supreme leader, got his man in office, and Ebrahim Raisi, though he does not come into office on by any means a popular mandate, he comes limping in through the back door. There are favorable wins. Oil prices are at $70 per barrel. There's a lot of forecasts that are saying oil prices could go to $100 per barrel. You have a Biden administration that is still intently interested in doing a deal. You even have regional actors, regional neighbors that have had tense relations with Iran over the past few years, showing signs that they're willing to reach out to Iran. So there are favorable wins for Ebrahim Raisi as he enters office. But I think that the lessons that we've learned from hardline candidates like Ebrahim Raisi is that they often never miss an opportunity to miss an opportunity.
So finally, in this segment, just briefly, if you could, on the other side, Iran basically is saying, promise us, the United States, you won't break the deal the way President Trump did. Is that something President Biden can get done?
No, that's going to be very difficult to get done because it's going to be very difficult to guarantee a deal with a next U.S. president. And frankly, as you know, David, it's doing deals with Iran is not always very popular on Capitol Hill. And so the Biden administration is going to have to expend political capital to get this deal done. And it's one thing if you're expending political capital and you can make an argument that maybe this kind of deal will help reformists in Iran. It's another thing when you have a figure like Ebrahim Raisi in power. And it makes it a lot more difficult to sell that kind of deal.
Thank you so much. We're going to have more with Afshin Mamalavi in our second hour of Balance of Power on Bloomberg Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Annabella Drulers, and she's over in Hong Kong. Annabella?
Thanks, David. Well, UK Prime Minister Boris Johnson says the COVID data looks good for lifting virus curbs on July 19th. This comes after a delay caused by a jump in cases fueled by the highly contagious Delta variant. It's driving the current wave of infections, which may be weeks from peaking. A study by Public Health England shows infection rates increasing across all age groups, but are highest among people aged 20 to 29. 1 in 5 businesses in London, which were office-based before the pandemic, want staff to work from home for 5 days a week after the COVID-19 crisis subsides. That's according to City AM, which cites a poll of more than 500 business leaders done by the London Chamber of Commerce and Industry. That study also found that nearly half of firms that can work remotely expect employees to work from home for up to 5 days a week. Spain's Prime Minister says he plans to pardon 9 Catalan separatists who were put in jail for their role in the illegal independence referendum of 2017. The leader says he'll recommend that his cabinet approve the pardons when it meets tomorrow. A backlash is expected from Conservatives who are opposed to any kind of reconciliation with the separatists. And the next heat wave in California is going to grip the northern part of the state. Last week, the Golden State avoided blackouts, but grid officials warn of stress to power supplies. They're pleading with people to conserve energy and not repeat last summer's widespread power outages. A triple-digit heat wave continues to grip the western US. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Annabelle Drewlers. This is Bloomberg. David?
Thank you so much, Annabelle. I spoke with former Treasury Secretary Steven Mnuchin earlier today as part of the Qatar Economic Forum, and he started by addressing the dual questions of growth and inflation.
I would say clearly in the foreseeable future, we could easily see 6 to 8% growth. I think the other area, and the previous panel commented on this, is the risk of inflation and how that plays out. Now, inflation is good for certain parts of the economy and very bad for other parts of the economy. So I do worry, as Larry Summers and others have said, that the chances are higher as opposed to lower, that this is ongoing inflation and that the Fed will need to adjust for that. I think in the interim, there'll be businesses that are growth businesses, high margin businesses with consumer spending that will do very well with higher inflation, and businesses with lower margins and high costs of labor are going to be concerned. So I think the inflation outlook is something that's going to need to be managed very carefully.
Well, let's talk about managing carefully, because it appears that the Fed is coming around to the view that at least has to be concerned about inflation. That's what we heard from the Fed after the FOMC meeting. We heard Chair Jay Powell say we're paying attention now to inflation, even though they didn't take specific action. Do you think that what the Fed is doing, basically in indicating down the road they're going to have to tighten some, do you think that that's going to be enough to rein in the danger of inflation?
Well, I have a lot of confidence in Chair Powell, and we worked obviously very closely over the last several years. Clearly, what the Fed did last year during the pandemic really, really helped, and it was critical. So there's no question that the Fed needs to go into a period of normalizing rates and normalizing the portfolio. And I think the question is really how quickly they do that and how they do that in an effort to control inflation. I think the issue is that the Fed is being cautious. The Fed models, the Treasury models, economic models really are not very good at predicting, given the vast amount of fiscal and monetary response we had over the last year. So I think this is something that needs to be watched very carefully. And I do think the markets are underestimating this risk.
Well, it does raise the broader question, at least for me, of how much of the growth we're seeing right now, because as you say, Mr. Secretary, we're going to see some robust growth this year in all likelihood. How much of that is because of the fiscal and monetary support as opposed to the underlying strength of the economy?
Well, I think a large part of that is going to be the fiscal and monetary that allowed for the reopening of the economy. So again, I just want to put this in perspective. Over a year ago, I never thought I'd be in a period of time sitting in an Oval Office talking about shutting down travel to Europe, talking about shutting down the entire economy. So there's no question that now that it's reopened, and now that, at least in the US, there's vast vaccine distribution, you're seeing businesses come back very, very strong. And I believe in particular the travel, entertainment, leisure business, people like these videos, but people want to get back out and travel and see people.
Yeah, I think that's very fair. You talked about some of the things that you did in the Trump administration, you and President Trump did, to really spur growth. And it certainly included tax cuts as well as regulatory reform. On the other hand, President Trump from the beginning took a very strong line with China, which, by the way, President Biden seems to be following up on. Looking back at it now, did you leave some growth on the table because of the need to be tough on China?
Well, I can't specifically say whether we did or whether we didn't. What I will say is that China is the second largest economy in the world. It has a large population, 1.3 billion. It's both the biggest opportunity and the biggest threat, with a large growing middle class. And the purpose of the tariffs were really to create a level playing field. So the issues that we were dealing with were the same issues that my predecessors were dealing with, Hank Paulson and others. And there's no question that the tariffs had the desired impact of getting China to the negotiating table. We made a lot of progress on the phase one trade deal. I would encourage the Biden administration to continue that work and try to have China make more reforms on trade and play by the global rules. I think that's important for their economy and very important for the rest of the world economy as well.
As the Biden administration does apparently turn from Europe to Asia, and particularly China, is it a zero-sum game? I mean, in the sense that in order to really get China to the bargaining table and get real concessions, you have to run the risk of giving up some growth.
Well, I don't think it's a zero-sum game. China, they were at the bargaining table. We made significant progress. I would encourage people to get back to the bargaining table, and let's see if they can get a phase two deal done. That's really the purpose. This was about protecting intellectual property, protecting fair and free trade, and having two-way trade. A major component, we believed, of the deficit was that our companies didn't have the same opportunities to participate in China as their companies had in the U.S.
That was former Treasury Secretary Steven Mnuchin talking to me earlier today as part of the Qatar Economic Forum. And we have some breaking news right now. We're reporting that the SEC is investigating some companies in their handling of the SolarWinds cyber attack. We'll dig into that and figure out exactly what they're investigating. But typically, it's a question of whether there was sufficient disclosure, perhaps, about the vulnerability. Coming up, former Defense Secretary Leon Panetta takes us through what President Biden accomplished in Europe and what's next for Iran when its new president comes to power. This is Balance of Power on Bloomberg Television and radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Biden is in the process of resetting U.S. foreign relations, from his G7 summit to his meeting with President Putin of Russia to his attempts to get a nuclear agreement with Iran back on track. For an appraisal of where we are and what happens next, we welcome now a Washington veteran. Leon Panetta has served as Secretary of Defense, as CIA Director, and as White House Chief of Staff, among several other major D.C. leadership positions. I won't go on too long. He is co-founder of the Panetta Institute for Public Policy. Thank you so much, Mr. Secretary, for being with us. Let's start with the G7. From your vantage point, did President Biden accomplish what he needed to? He certainly set a different tone, but it's more than just tone.
I think it was essentially about restoring the U.S. role as a world leader. And it's a role that the United States has had since the end of World War II, and it clearly is built on the strength of our alliances. And I think what Joe Biden tried to do is to reaffirm our relationship with those alliances, whether it was Great Britain, whether it was the G7, whether it was NATO, whether it was the European Union. I think it was very important for President Biden to say to the rest of the world that the United States is there, supports these alliances, and believes that we all have a role to play in using these alliances, not only to deal with some of the threats from climate change as well as COVID, but also to provide security. So I think it was an important message to send to the world.
So he sent the message now, and he was not ambivalent in doing so. The question is, what does he need to do now to follow up? Because at some point people will say, yeah, but what are we actually doing? What, from your point of view, would be the most important thing, concrete next step to take?
Well, that's going to be the test. It's not the words, it's going to be the actions, particularly when it comes to the relationship with Putin and Russia. I think it was important for the president to lay out where the red lines are. They seem to have had a pretty straightforward conversation on those issues. But the real challenge is going to be whether or not the president is willing to back up that threat with regards to the red line. If Russia does something that President Biden has warned him against, I think it's going to be extremely important for the United States to take strong action to make clear that those really are red lines and not just a bluff.
Well, it's an interesting point because I noted that President Biden, in his news conference afterwards, said he gave a list, as I understand it, to President Putin of specific industries. They said, do not mess with these industries and infrastructure. So that is pretty much a red line, right? Now, if there's some hack from Russian soil that we can identify that goes after those industries, President Biden almost has to do something, doesn't he?
I don't think there's any question. The worst thing that could happen is that if he doesn't stand by his word, it's going to send a terrible message, not just to our adversaries, but to our allies as well. And so, if in fact Russia, through the various criminal operations that are operating out of Russia, if there is a ransom attack or a cyber attack against our vital infrastructure in this country, and the president has laid out what constitutes our vital infrastructure. If something like that happens, there's no question in my mind that President Biden then has to make clear that we are going to take action against their infrastructure as well. That was certainly the nature of the threat by saying very clearly, you have your pipelines as well that could be threatened by a cyber attack. He couldn't have made that plainer. So a lot will depend on whether the president does take strong action in light of what Russia tries to do.
And as far as we could tell from the outside, it looked like President Biden didn't have much trouble getting the European allies to agree with respect to Russia. China might be a little trickier because there are, as you know so well, profound commercial relations. For example, between Germany and China, they have a somewhat different relationship to China. What should we be doing with respect to China that would bring the allies along? And let me give you a specific instance, this Wuhan laboratory question, which I saw that Jake Sullivan, the National Security Advisor, just over the weekend said, China has got to come forward on that. Can we really make progress on that?
I think in many ways, the same approach to Russia is the kind of approach that's important for China, which basically means that the United States has to deal with both of them from a position of strength. I think for too long, Russia and China both have seen weakness on the part of the United States and taken advantage of that. I think that it is important now to make clear that that is no longer the case. And the way you approach this from a position of strength is essentially what the president did with regards to Russia, which is laying out the red lines. And I think he's got to do the same thing with China. There are red lines in the relationship with China that China cannot cross, whether it's dealing with the South China Sea and the militarization of South China Sea, whether it's dealing with Taiwan, whether it is dealing with trade and freedom of the seas issues. There are a number of clear lines that the United States has to establish. Once we've done that, and once we've shown that we're going to maintain our power in the Pacific, if not enhance it, then I think you can have a dialogue. It'll at least be based on an equal relationship where the United States says, you know, these are the areas that are important. I think Wuhan fits into that. Wuhan is extremely important to be able to find out what the hell happened here with regards to COVID-19. We need to know just exactly how that happened in order to make sure that it doesn't happen again. And I think that's in China's interest, as well as the United States, as well as the rest of the world. So I think we ought to be very tough on that issue to make sure that we get their cooperation.
Finally, Mr. Secretary, let's sneak in one more, which is Iran. They had the election yesterday of a new president who is a personal protege of the supreme leader there. From your point of view, does that make it more difficult to really get where we want to go, the United States wants to go in terms of a nuclear agreement? Or could it make it easier because now they have somebody who really is joined at the hip, as it were, with the supreme leader?
I think this may be a real opportunity. I mean, it was a foregone conclusion that he was going to win this election. I don't think there was any question, and he certainly won in an overwhelming way, although there wasn't that great a voter turnout in terms of the election itself. But since that person did win, and considering his relationship to the Ayatollah, I think there is a very good chance that a hardliner might be easier to deal with on trying to get back into the nuclear deal than someone who might be more moderate and would have a tougher time bringing the rest of the country and the IRGC along. So I think there is an opportunity here, and I hope that we're able to take advantage of it.
Okay, thank you so much. Always a pleasure to have you with us, Mr. Secretary. He's Leon Panetta, chairman of the Panetta Institute for Public Policy. Coming up here, we're going to preview tomorrow the election, the primaries actually, for the mayor of New York City. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Tomorrow, Republicans and Democrats in New York City will nominate their candidates to take over as mayor, with no less than 13 candidates still in the race on the Democratic side, and the brand new ranked choice voting method used to sort them all out. Bloomberg's Charlie Pellet explains how it will work.
Democrats voting in New York's mayoral primary will choose their favorite candidate as usual. But in this ranked choice election, they'll be allowed to put as many as 5 names on their ballot in order of preference. With 13 candidates running, voters will face complex decisions and a set of intricate rules. A candidate with more than 50% of the first place votes wins outright. If no one hits that mark, the candidate with the fewest first place votes is eliminated. Every ballot cast for that candidate is tabulated, and the second place votes are distributed among the field. The process repeats until just 2 contenders remain, and the one with the most votes wins. Ranked choice voting is new to New York, but not to the U.S. It was first used in a local election in Ohio in 1915. San Francisco, Minneapolis, and Santa Fe are among the cities that currently employ it in municipal elections. 5 states used ranked choice in 2020 presidential primaries or caucuses. And in 2020, Maine became the first state to adopt the system for a presidential general election. While ranked choice voting eliminates the need for runoffs, it will take time to tabulate the votes. Election officials say the winner may not be known for weeks, but with registered Democrats outnumbering Republicans by a huge margin in New York, it's likely that whoever prevails in this primary will become the city's next mayor.
For more on the race for mayor in New York City, we welcome now Bloomberg News City Hall reporter Henry Goldman. Henry, thanks so much for joining us. So just picking up with what we heard from Charlie Pellet, how long is this going to take? Could it really take weeks? I mean, we have computers and stuff to sort this all out, don't we?
It'll certainly take weeks because the absentee ballots aren't counted for at least a week after the election. They're still coming in the mail. The post office, as you know, was slowed down, and it's in light of that, it's going to take time to count all those ballots.
So, Henry, give us a sense of what we know about the election so far, because there has been early voting, and I understand it has not been as robust as some expected.
Well, there are close to 200,000 early votes. That's not the same as the presidential election, which happened in a pandemic. There were about 1 million, but 200,000 early votes in a mayoral election is a significant number of votes. I'd say there's quite a bit of interest in this year's election at this point.
And to that point, what is the interest in? What do you think the big issue will turn out to have been?
It's hard to say. I mean, there's a real split in point of view about where to go as a city. Do you move in a direction of really trying to solve income inequality and become a progressive beacon to the world, as cities like Amsterdam have, for example? Or do you attack these problems, almost one at a time, tactically, quickly, if it's crime, if it's housing, if it's homelessness, and kind of leave the overarching ideology for another day or maybe discard it altogether?
And do we have a sense front-runners, as Eric Adams has been in front by the polls, but other people have sneaked up?
It is such a difficult election to predict because there are so many candidates, Many of them are qualified in their own way. They're making their arguments. And it's ranked choice voting, as you've so eloquently pointed out to your listeners. It's a toss-up. It's a jump ball. There are maybe 4 candidates in the lead, according to polls that have varying consistency and reliability.
Henry? Sorry, I got to leave it there. Thanks so much.
Go.
Thanks so much to Bloomberg's Henry Goldman. And this is Bloomberg.